Okay, so we're going to look at the pairs that are currently on our watch list, and we notice a bias shift right now. Reports being broadcasted right now that the US and Iran are currently looking for a potential talks, potential negotiation, which is very, very bearish for the oil price. See oil coming down and strongly with momentum, and so we had initial bias in EuroCAD this week for those shorts. However, because of that falling oil price, we are now looking to consider those EuroCAD longs with those CAD shorts being expressed here. And so we see in the daily time frame that EuroCAD has actually come down into this area of demand situated over here. We see that it has taken liquidity over here and broke structure over here, and it has rallied up and come down into this discount pricing below 0.5 fib over there, which is also coincides with that liquidity, those equal lows being swiped. And we also see that internal liquidation happening in the 4-hour time frame over there before that V-shaped reversal going up. So we're considering that as another demand zone. However, we'll be more interested to long EuroCAD on the daily time frame after it breaks this high over here, which is the order flow higher, waiting for this to get broken, have that retest and come down for those longs instead, assuming that the de-escalation news sustains for the rest of the week and the oil price keeps going down. And now at the start of the week, we were also considering Euro GBP shorts. However, right now we see that Euro GBP has now come up mainly because Euro is more affected by those rising oil prices than the GBP. And we see that has now affected the Euro GBP price to go up and higher. And so this might actually liquidate this high over here, and we will be waiting for some confirmation for those shorts. My bias for Euro GBP is still shorts as at this moment due to these two very valid areas of supply over here, which it is still respecting. However, we'll have to see how the news reacts, and we'll probably have some more catalysts this week for the GBP because of the red folder news coming out later this week, and we'll be looking out for that. And initially this week we also had a bias of AUD NZD shorts where we were waiting for this low to be broken for that change of character to short. However, AUD is actually more affected by the rising oil prices, just like Euro is. And because of that oil coming down, we see that relief rally coming up for AUD NZD, reflecting that strong Aussie, and which is all right for us because we still have some liquidity over here. If our bias would still remain to be shorts, we'll be waiting for price to come up and liquidate those areas of liquidity and change of character on the way to the downside, and then short from there, in my opinion. But also we'll be looking out for that AUD CPI news coming out this week, and if AUD comes out weaker than expected than the projected amount, then that would be another confluence for us to take those AUD NZD shorts. And we're also considering gold longs because of the rapid de-escalation news that we're receiving right now. And we actually noticed that gold has rallied up over here at the start of July and come down into discount pricing below 0.5 fib, and has reacted to that area of liquidity over here and that last area of liquidity with that V-shaped reversal to the upside. And we see that gold has actually come up and broke structure over here after taking that internal liquidity. And we see once again price come back down into discount pricing. If we draw our Fibonacci retracement from swing low to swing high of that most recent swing, we see the prices come down actually into that demand zone, liquidated that area of liquidity, and we see that V-shaped reversal to the upside. And we zoom in on the 1-hour time frame, and we see those ascending lows over here that haven't been liquidated yet, that are also just at the border of that demand zone. We see that internal liquidation and that change of character, making that very valid area of demand. And so we'll be looking for gold to come down into that area of liquidity, change character from there, and we'll be happy to look for longs as if the de-escalation news still sustains at that point. For GBP NZD, we go to the daily time frame, and we see that price is actually in that most recent demand zone. We see that liquidation and that change of character, and which also coincides with these equal lows over here, and we see that successful swipe and that reaction with that wick on the daily time frame. However, we still have this very strong high, in my opinion, which creates that internal area of supply. So we'll be looking for price to break through that and then retest, and then we'll be looking for longs for GBP NZD. And For GBP AUD, my bias is shorts for this one, mainly because prices come down after prices gone up after changing character over here on the daily time frame. And we see, if we draw our Fibonacci retracement from swing high to swing low, we see the prices actually come up into premium pricing, and we see that change of character in the daily. And so we're looking for a 4-hour setup here. There's still some key areas of liquidity here. This would be the most recent area of supply. We have that liquidation over here and that change of character which happened, and so we're looking for price to come back up there into that premium pricing before coming down. And we'll be looking at the US and the UK government bond yields, which actually left a gap here on the 4-hour time frame in consideration before we look at any USD related or associated trades or any GBP associated trades.